Time for another Monday, and today we are talking taxes.
I love that we have this like happy music because
right?
taxes don't really make people feel this way. No need to fear the paperwork though this season. Here to tell us everything we need to know about taxes is CPA and former IRS criminal investigator Kemberley Washington.
She knows her stuff.
She knows all the. We've literally been asking you a bazillion questions.
Yeah.
What's new this tax season?
Right, so if you're someone who's listening, you're someone, of course, you're like, okay, I don't itemize, and so I am using the standard deduction. Keep in mind, those amounts are a little bit higher this year. If you're married, filing joint, that amount is $29,200. But if you're single, it's about $14,600. And head of household, $19,000. So you do want to keep that in mind. The second thing you do want to keep in mind, if you're someone who's preparing your taxes right now, you're saying, okay, while I actually owe when it comes to doing my taxes, you can stop doing your tax return and you can put some money into an IRA. An IRA, of course, will reduce your tax liability, and you still have time until April 15th, and you can put $7,000 into an IRA or $8,000 if you're 50 or older. And last but certainly not least, if you're someone and you pull money out of an IRA or retirement account last year, up to $1,000, you don't have to pay a penalty if you use it for emergencies. So those are some of the new things this year.
That's so smart. And what about ways? I think people are always wondering, well, how do I lower the bill? How do I lower the bill? So how do you do it?
It really does depend on your tax situation. But if you're someone that's listening, you're a parent and you have children, you want to keep in mind child and dependent care credit, because up to $3,000 for one child you can take as a deduction, $6,000 if you have two children. And keep in mind, this is for nanny expenses, babysitting services, or even camps that you pay for. If you're a teacher and you're listening right now, you're like, okay, I'm paying some money for the classroom supplies and all of these things. You can take a $300 deduction whether or not you itemize. But last but certainly not least, when it comes to 529 plans, keep in mind the money that you stash away for your children or your loved ones, you can actually take a deduction when it comes to 529s dependent on your state, so a state tax deduction. So you also want to keep that in mind.
Yeah, I know. That's like a really good little tip there.
It is.
Specifically when you're looking at debt, how do you tackle that? Especially when you're thinking about taxes this time of year.
Well, if you want to think about something, one little thing that I often tell people, this is an overlooked deduction. If you gave money to a friend or a family member, and keep in mind it's called the bad debt deduction, and that person didn't pay you back, you may be able to take it as a deduction on your tax return. It's called a bad debt expense. This could be even the case if, of course, you gave money to a contractor and they didn't perform work on your home, and they kind of course, maybe they filed bankruptcy or whatever the case may be. But many people don't realize if someone owes you money, you may be able to take it as a bad debt deduction on your tax return. You do want to talk to your CPA or your tax professional, but that could also be an option for you as well.
Oh, I think a lot of friends groups are going to be like, I need that bad debt deduction.
Yes, true.
What about IRS penalties? Because obviously, like, people end up with these penalties. Is there any way you can get those removed?
So a small little trick you can do, really simple. You could pick up the phone, you can call the IRS and say, hey, do I qualify for what's called a first-time penalty abatement? And keep in mind, the IRS, right when you're on the call, they can remove this penalty. So if you haven't had penalties in the last 3 years, this could be something that could lower your bill. So this is like what I like to call a get out of jail free card. So those are some things that you do want to keep in mind when it comes to your taxes.
But the key there was first time.
First time, but listen, first time within the last 3 years, you'll still be able to qualify. So do keep that in mind.
So once every 3 years.
The clock starts over.
Yes, something to think about.
Kemberley, you are such a pleasure. Thank you so much for being here and giving us this advice. This is the time when we need it.
Yes, it is. Thank you.